Hello everyone, welcome to EduTap and welcome to today's session. So a very good morning to all of you. Good morning Sarish, good morning Abhinav. So today we are going to do a very important topic for your phase 1, for your phase 2 of the examination. Let it be the RBI Grade B, the NABARD Grade A, the SEBI Grade A. We are talking about financial inclusion, which is a very hot topic, which is a very important topic. And this is important for your objective, for your descriptive of the examination. And today we are going to have the clarity about the financial inclusion index. So recently the Reserve Bank of India has released the financial inclusion index. So what is this financial inclusion index for the March 2023? So today we are going to see that. And what is this financial inclusion index? Why it is so important? The RBI governors in the inaugural address that we will discuss, in that the RBI's governor has informed about the importance of the financial inclusion index, and today we are also going to see that. So be with me till the end of the session, and we will also practice some questions for the financial inclusion index. But without any delay, I hope you understand that how important this topic is. So without any delay, let's get started. But before that, do subscribe to our YouTube channel and join our Telegram channel. Here you will get the PDF of the session. Okay. So now starting with the financial inclusion index, the RBI has released the financial inclusion index, which has rose to 60.1 in March 2023. So what was the prior data? What is the meaning of this increase? Why this 60.1 is the important number, and what is this number? Everything we are going to discuss, but before that we need to understand that what is financial inclusion index. So in July 2021, there was the Financial Inclusion Summit that was conducted by Economic Times, and in that summit, the Reserve Bank of India's Governor Shri Shaktikanta Das informed the importance of the Financial Inclusion Index, that the greater financial inclusion is crucial, is important for a wider, inclusive and sustainable growth. We have to include the people of the country in the financial system of the country for the country to grow in a sustainable manner, in an inclusive manner. Okay, we need the sound fundamentals where we need our people to have the financial literacy. Okay, so therefore, a measure of financial inclusion is necessary to effectively monitor the progress. There are different policy initiatives that are undertaken by different regulators, by the government of our country. So how well these policy initiatives are working to undertake and promote the financial inclusion. So for that, there is the measure of financial inclusion that is needed to monitor the progress that has happened because of the policy initiatives, how much progress we have made in the financial inclusion, in including the people of our country in the financial system of our country. So for that, the Financial Inclusion Index was released. I hope now you will know that why the Financial Inclusion Index was released. It was released to monitor the progress of the policy initiatives that are undertaken to promote the financial inclusion. And the RBI had constructed the Composite Financial Inclusion Index to capture the extent of the financial inclusion that is happening across the country. Okay. And the first Financial Inclusion Index was published in August 2021 for the financial year that was ending March 2021. Okay. So remember this, that when the first Financial Inclusion Index was published, it was published in August 2021 for the financial year that was ending March 2021. And now in September 2023, the Financial Inclusion Index has been released for the financial year that is ending March 2023, for which we will see the data. Okay. Now the financial inclusion, does it means that you have a bank account, so you are financially included? Does anyone, like in rural people, if the people have the bank account, so we will say that the person is financially included? No, the financial inclusion is not such a small topic, it's not such a narrow topic. Financial Inclusion Index is a comprehensive index that is incorporating the details of banking. Do you have a bank account? Do you use the banking services? Do you use the investment services, or are you engaged in the financial markets? Do you use the insurance facilities in the country or not? Do you have the pension scheme? Are you using some pension scheme or not? So financial inclusion does not only mean that you should have the banking facility, but it also means that are you financially included in the financial markets? Are you having the insurance facility or not? So Financial Inclusion Index is constructed by the Reserve Bank of India in consultation with the government because government is running many of the pension schemes and respective sectoral regulators. Okay, for the insurance we have the IRDI, for the pension sector we have the PFRDA and such. So you have to understand that the financial inclusion index is constructed by RBI in consultation with government and the respective sectoral regulators, let it be SEBI, let it be PFRDA, IRDI and such. Okay, so I hope until this it is very clear that what is financial inclusion index. Now the index captures the information on various aspects of the financial inclusion. Okay, we have seen that the financial inclusion index captures the information regarding the different sectors of the financial segment of our country in a single value, and this index is capturing the information in a single value. Like we have seen that the financial inclusion index for the March 2023 is 60.1. Now what does the single value mean? The value is ranging between 0 and 100. 0 means that you are, like in the country, the people are totally financially excluded. Okay, so 0 represents the complete financial exclusion and 100 indicates full financial inclusion. So the near the value is 200, the better it is. So remember that what does 0 means, what does 100 means in the financial inclusion index. 0 means that you are, like, the country has complete financial exclusion, and 100 indicates that the country has full financial inclusion, and we are around 60.1. So you can understand that more than 50% we can say that it is near the 100. So we are towards the full financial inclusion in our country. Okay. Now there are 3 broad parameters for the financial inclusion index. There are the 3 sub indices according to which the financial index is constructed. Financial inclusion index is constructed, that is access, usage and quality. Access means it is the supply side indicator that tells us that the products, the digital products or the products of the financial segment, are they being provided to the people? The banks are being opened. Are there the physical infrastructure that is available? The insurance, there are the insurance that is being provided to the people. So it shows the supply side. The excess shows the supply side segment of the financial inclusion, that for the financial inclusion, the facilities are being provided, the products are being provided, the services are being provided. Do you have a bank account near your house? Okay. Usage means, now this is a demand side. This is a demand side factor, that are you able to use it? Do you have the demand for the banking facilities, for the insurance facilities, for the pension facilities, for the pension schemes? So usage is the second sub-index that show that the demand is there. Like you have a bank account near your house, but are you going to that bank to open your bank account or such? Are you going to that bank to get different services that you want? Okay, so excess means that, okay, the supply side is there, that the supply has been done of the facilities. Usage means, are you able to use it? Are you using it? Do you have the demand? Do the people have the demand for the facilities? Are the demand is being created for the financial facilities or not? Okay, quality means, now quality of financial inclusion means what? That there is the financial literacy among the people. The consumer protection is happening or not. There is the inequality. There is the inequality of the financial facility. So that means quality of the financial inclusion. That the products, the services that are being provided to you, they are being provided to all the people around the country. Okay, there are the RRBs, the regional rural banks. There are the cooperative banks. Okay, so that even the far off areas, the length and breadth of the country can get the financial services. Okay, so the consumer protection, the financial literacy. So I hope you have understood the 3 sub parameters, the 3 sub indices of the financial inclusion index. Excess, do you have the excess? Do you have the supply of the financial products? Are you using it? Are you demanding it? Do the people in the country have the demand for it? Quality, that means there is financial literacy that is spreading or not. The consumer is being protected or not. The equality of the inequality of the financial products is decreasing or not. So these are the 3 parameters. Now let's see the weightage of these parameters in the index. So the excess has 35% of the weightage in the financial inclusion index. The usage has the maximum weightage, that is 45% of the weightage, and the quality has 20% of the weightage. So the highest weightage is to the usage. If you have the excess, the bank is near you, but you are not going to the bank to open your bank account. So that bank is kind of useless for the people. until you go to the bank account, you start using the facilities of the bank. Okay, so that is the usage. That's why it is very important. First, you need to have the demand of the services. Excess, then it is second highest weightage is given to excess, and the third highest weightage is given to the quality. Remember this very clearly. Okay, yes. Now the financial inclusion index, it is constructed without any base. You can understand that 0 means totally financially excluded, 100 means full financial inclusion. So that is the how the index is gauged, how the index is understood. That if the index is 20, that means we are near 0. The financial inclusion is not very good. There is actually the financial exclusion that is present. Okay, so financial inclusion index do not need any base, because the 0 and the 100 have some understanding, have some values. Okay, and it reflects the cumulative efforts of all the stakeholders, all the regulators over the years towards the financial inclusion. If our financial inclusion index value is increasing, that means the financial inclusion is getting better in our country. That means there is more financial inclusion is happening in our country, as easy as that. So the value of the financial inclusion index for March 2023 stands at 0.1 against 56.4. So you can understand that near 100, we are getting more near 100. That means we are getting nearer to the full financial inclusion, and that is good. And it has been seen that the growth has been witnessed across all the sub indices. Let it be the excess, let it be the usage, or the quality. In all the sub indices, there is the growth that has been witnessed. And let me tell you that these sub indices, they have 97 indicators, and as per the 97 indicators, the excess, usage, and quality are calculated, and that's how the indicator is the financial inclusion index is prepared. Okay, so like financial inclusion index has 3 sub indices. In those 3 sub indices, there are 97 indicators according to which the financial inclusion index is being calculated. Okay, improvements in the financial inclusion index has been, the growth has been witnessed across all the sub indices, excess, usage, and quality. But the improvement in the major improvement in the financial inclusion index was mainly contributed by the usage and the quality dimension. So you can understand that that is very good, that we are actually demanding the facilities now, and we are having the growth in the financial literacy is having, the consumer protection is having more, there is more equality of the financial services that is coming in our country, reflecting the deepening of financial inclusion. So it is like, if we have the financial inclusion, we will demand the services more. Okay, so this is deepening, reflecting the deepening of the financial inclusion. So this is all for today. Is there any question that you have? Okay, I'm going to start with the homework questions. So if there is any confusion that you have, you can ask right now, or should I move forward with the questions? So here is the first homework question. Recently, Financial Inclusion Index for the year ending March 2023 has since been released. So financial inclusion has been released. You have to tell that what is the data for the March 2023 that has been recently released. Okay, so easy question. Now you all must know about it. So the second question is seemingly a little bigger, but the direct question is that which of the following is not one of the parameters, not one of the sub indices in the composite financial inclusion index. So you should be able to answer this very easily now, and tell me that how many indicators are present in the 3 sub indices. That also you should be able to tell. So tell me in the comment section that how many of the indicators there are in the 3 sub indices. Okay, so thank you very much, and if you have any query, you can tell me, or you can mail us here, or you can contact us through this number. So thank you very much, everyone.